buy or sell live cattle futures. First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we can see that we have live cattle here. We unfortunately do not get any data from Refinitiv, but we have a bunch of data from other places. So let's start here by looking at the charts. So these are weekly data points. This is, of course, the very, very big picture. I did find these multi-year time cycles that have been pretty good at calling, the major direction of price. Based on the recent time cycle, this one, it suggests that there is the declining phase on the horizon. When we look at previous times where we have had that part of the time cycle, you see that it usually is associated with an accelerated pullback. So it's a possibility, of course, there's no guarantee, but let's explore further. Okay. So these are the weekly data points. We have seen a very substantial move. Something you can see, however, for multiple, many years here, actually throughout most of the history of these futures, it has a tendency to have pullbacks. It's pretty clear that it likes to move in this way. Based on that, given that we already have seen a protracted rally without any, pullback, then there is reason to, suspect that, maybe the usual behavior of the security will come back. Because if we look at this, here we have a major rally and a sell-off, major rally, sell-off, major rally and a sell-off here as well. And this is, in very recent history. Then after this breakout here, we have seen, a huge rally, but I think that there's an elevated probability that the prior behavior of the security will come back. That makes a lot of sense. When we jump here into the daily data points, then we see that more nuanced picture of what we saw on the weeklies. And yeah, we have seen a very strong rally here on the dailies in the recent days. Very, rally one day after another. So even on like the shorter time frame, there is the expectation of at least a pullback. That has been the average behavior of the security. When we look at these other indicators, that is when it gets you really get those red flags. When we look at the MACD, it is at an extreme level, meaning that throughout, let's actually zoom out a bit here. So throughout the history of this commodity, it is very rare to have this kind of momentum to the upside. Previous times where we have had a very substantial move up, it's usually been followed by a substantial pullback. Looking at RSI, even when we go back here to 1986, so this is a lot of data, this current RSI level is very rare. It is even more rare to become even more overbought. The distance from the purple 20-week moving average, green 50-week, blue 100-week, and the red 200-week moving average are at historic extremes. So that's why it makes sense to look at what happened previous times where we had these kinds of readings. So the previous time we had both a very extreme RSI, as you can see here, and also very high readings on all the PPOs. That is here during this major peak, and that was followed by a very substantial pullback. When we go to the daily data points, we see something very similar. The distance from the 200-day moving average and also the other PPOs, it's very, very extreme. There have been times where we have been even higher though, so that is a possibility. Though what we see here on the daily data points must also be viewed in the context of what is happening on the weeklies. When we look here on the accumulation distribution indicator, it shows us that this recent rally has been on decreasing volume. And that is, a bearish divergence. So I think that one could make a pretty strong case here that this one is, for all intents and purposes, very overbought. There's been a massive narrative about, inflation, especially in commodities. And the big debate is whether this is transitory inflation or whether it is more sticky and permanent. There's been a lot of issues when it comes to the supply chain, especially after the whole lockdown situation. But these issues with the supply chain, at least, there's all reason to think that that will be resolved. Because it's not like, the world population has doubled, after, the lockdown or anything like that. Nor have we seen, a major sickness among livestock either. So while you could certainly make the case that the very lax, policies from the central banks and others, it certainly has had, an effect on inflation. So some of the inflation is definitively going to stay around, because of that. When it comes to, prior times where we have seen full-bore, runaway inflation in food prices, that's usually happened in far more dire context than what we have at the moment. And given the political disruptive potential of food price inflation, then I that really makes me doubt that the powers that be will allow too much inflation in food prices, which means that in terms of live cattle futures, it could go higher. But given that we have seen that the powers that be are willing to go very far to protect asset prices, I think they are going to go even further to prevent social unrest related to runaway food prices. Let's now look at the seasonality. So when it comes to the seasonality here on the left, this is actually in regards to livestock. So more broadly, livestock, live cattle is a specific type of livestock. But I did not get any live cattle futures seasonality here from stockcharts.com. So let's first look at stock charts. So over the last 5 years, we do see that there is this weakening here towards April. May is strong, but then June, July, and August are weak. Over the last 10 years, rather similar message. And over the last 20 years, then we can quite clearly see that in terms of the seasonality, it certainly gets weaker heading towards August. So the seasonality here is bearish for livestock, okay? To the right here, we do have specifically live cattle futures, and the seasonality forecaster here shows us the average over the last 5 years and 7 years. Based on that, we do see that the seasonality here is pretty clearly, based on the history, of course, bearish. It is bearish heading here towards 21st, 28th-ish of August, which fits very neatly with what we see here on the left in terms of the broader livestock seasonality. So the data we do have on seasonality is more favorable to the bears. When we then look at correlations, we see that there's a 64% with S&P 500, 85% with the agriculture ETF, DBA, 38% with the livestock ETF, cow, and then minus 24% with the dollar index. Daily data points, 69% SPY, 86% DBA, 28% cow, and 90% with the dollar index. So the strongest correlations we got is with the DBA. And this is the DBA ETF, Agriculture Fund. It is, however, a bit broad. So specifically, the underlying index includes corn, soybeans, wheat, sugar, cocoa, coffee, cotton, live cattle, feeder cattle, and lean hogs. But as we saw, live cattle futures were most strongly correlated with cow. So let's do a quick analysis of it. Okay, it was most strongly, of course, correlated with the DBA. Okay, most strongly correlated with DBA. So here we have the DBA chart, and we have seen a very massive trend change. So it is very interesting, though, that for a very substantial amount of time, so ever since this peak back here in 2011, this one has been in a very substantial downtrend. Then it changed here after the lockdown, and we have seen a very steady rise. The last time, that, the central banks and the rest were firing on all cylinders was back here. This is when they were printing money all over the place, being super accommodative to the markets. And what did we see back then? We did see, especially here since mid-2010 and leading here up into, into 2011, this was also the time where we had a lot of concern about Europe as well. So in America and basically across the globe, the bankers were just being super accommodative. What we did see here very clearly is that there was a very strong rally initially, but then it just fell to pieces later on. And that kind of behavior is something we have seen before. Here we just see a super rally, and then we just fall to pieces. So given that, and that is, the history of this ETF, it makes me a little bit suspicious about this rally. This has been a very strong rally. It's of course been based on real things happening in the economy, but we have seen, before here that the investors have a tendency to price in all the good news in quick succession, and then we just run out of good news to price in, at least good for higher prices. And then we have a tendency, a history here, to see some mean reversion. Here we are looking at live cattle futures against the DBA. And something that we have seen recently, that is a succession of lower highs and lower lows. So there's been, a situation where we have seen that the live cattle futures have weakened vis-a-vis the broader agriculture ETF. So that's definitively, some relevant data. We can then look at the DBA against the S&P 500. When we do that comparison, something very interesting jumps up here on the radar. I think that it is very clear that we have a very monster rounding bottom in development. So that is definitively very interesting in terms of, the future price moves in agriculture, and the very real probability that agriculture in a very long-term picture is going to outperform the S&P. So here we see that we formed this floor. We are breaking out a bit here. I think you can see it pretty clearly yourself. Here we see that the DBA, agriculture is just systematically weakening. Very clear trend change. So to sum up my take here on live cattle futures, I think that when we look at the technicals, one could make a very strong case that we are very overbought and do a pullback. When it comes to the seasonality, that also corroborates a more bearish thesis. When we look at the comparisons, live cattle against the DBA, we did see that also corroborates a more bearish take. But when we do look, however, at the DBA against the SPY, it is clear that there is something pretty fundamental happening here when it comes to agriculture. A major trend change that certainly seems to become beneficial to agriculture, and could set the stage for a longer period where agriculture outperforms the S&P 500. To be perfectly clear, the S&P 500 is still at a very extreme overbought level. So if we are going to go into a period where agriculture outperforms S&P 500, it could very well be that the S&P will go into a bear market, and that the agriculture will just perform better, also because of that. It is of course possible that we will see very aggressive inflation in agricultural commodities. There's been a lot of talk about that. It is a real possibility, and that also, of course, would be bullish for live cattle futures. The thing is, though, that we know for an absolute fact that the powers that be are willing to go very far to prevent unrest. The massive support of the financial markets, stocks, that we saw, after the lockdown, that just continued and continued, that shows us, that they are willing to go very far. And I do think that they also are willing to go very far to prevent runaway prices in agricultural commodities, because that can be a trigger for very substantial social unrest.